Hello traders, and welcome to another weekly market forecast video. So hopefully everybody's having a great weekend so far and getting ready for the new week of trading. We are going to have some more volatility within the week from Wednesday's FOMC interest rate decision. As some of you may know, that there will be interest rate cut from the US Fed by at least 25 basis points. Last week we have seen the European Central Bank with a 60 basis point rate cut, so the market is going to be reacting in a big way overall. So let's have a look first of all what we have for the dollar index. We have started a bounce cycle from the 27th of August low right here, and we can still see another move to the upside at least towards the 102,800, 103 area before we get any reaction. So what the market is doing right here, it's accumulation for this move to the upside. As far as we are above the lows from 6th of September, the market is good to go up from here. And this will be our bias for the dollar index for the next week ahead, and potentially until the end of this month. For the dollar yen, we are expecting here soon to get a bounce to the upside with the dollar index bounce as well. We have reached the Fibonacci extension area from this move right here, and we can overall see a reaction is coming to the market before anything else, and this will be still our bias for the upside. Like we have been saying for the last week, the market from these levels is getting ready for a reaction. This was the reaction between buyers and sellers. When the market is getting ready to react, sometimes you get lower lows in a very choppy structure before the market moves to the upside. So if you want to know more details about any of the markets, by the way, if you are new here, we do have a paid service, which is the link is in the description. We cover much more in detail that we don't cover up here on YouTube for free. And we also provide trade recommendations, which we have been doing great since the beginning that we started in March. You can see our previous results from the previous video, and we are going to give you an update by the end of this month as well, how we have finished our 6-month result, which is very stable and very reliable, because we do not take anything in random. Everything is thought thoroughly, and we have a quality over quantity approach, which is not very commonly seen within the trading industry. So for the dollar yen, we are getting ready soon to have a bounce before anything else takes place, and this will be the next reaction from this pair right here. For the euro, we can see more downside in this pair after we have reached the 112 area and a major Fibonacci extension target area with a high on the 26th of August. This was the first part of the reaction, and now after this bounce, we are still expecting the market to give us at least one or two more lows in this type of structure, and then we might get a reaction afterwards. But for the time being, this is the next move that we can see in the euro, and we are biased to the downside as far as we are below the high from 6th of September. For the pound dollar, similar to the euro dollar, we can overall see more downside within this correction. As far as we are below this peak from the 6th of September, we should go and trade lower for at least one or two more lows before we can see a reaction later on. So for now, this will be our bias to the downside for the pound dollar as far as we are below this area right here. For the pound yen, we can see that the market is getting ready after retesting the lows from the 5th of August in this case to give us a bounce before the next move. So the market right here is getting accumulation for at least this reaction to the upside first before anything else takes place. And this coincides together with the dollar yen expectation move to the upside and the dollar bounce to the upside. In this specific scenario, the yen currency will get weaker to allow this pair to make this bounce before we see anything else later on. For the EURUSD, we have got this move to the upside as we have expected. Then the market moved to the downside, and now we are correcting right here. Overall, we are biased to the downside for the EURUSD after this fake spike to the upside, but short term, we might potentially see another move to the upside like that before we break to the downside. So overall, this is going to be a sideways market for the next 1 to 2 weeks before the next move, and the next bigger move will be to the downside, but it might not be ready as of now and make another move higher before the drop. For oil, as we have expected last week, we have said after this downside we have reached the Fibonacci extension area. The market reacted to the upside. Now we are expecting this pullback for another move to the upside, preferably, and then the market will still sell and go to the downside from here. There is a bigger target area to be reached lower, and obviously we have been on point with oil. All these moves to the downside, we have been able to see them ahead of time, especially for our members that they knew about this from April. And this is what we can expect next. But keep in mind that if the market is very aggressive, this move doesn't need to happen and the market can fall from here. So we do not really recommend at this point any buy setups for oil for the longer term. But if we get a three swing bounce, this might be another good chance to sell the trend to the downside. Now for gold, we have got the new all-time highs as we have been expecting ever since August. It was delayed with this accumulation cycle right here. Last week we expected from here to possibly get a double correction lower, but of course we always explain that we never sell gold because the main trend is to the upside. So this move didn't happen, and then the buyers were able to make new highs above this high. We can also observe from here on the RSI trend line that we broke higher on Thursday, and this was mainly because of the interest rate cut decision from the ECB, 60 basis points. Gold always reacts higher with big interest rate cuts. Of course, this week we have the US interest rate cut, but this is going to be a much smaller effect than the European Central Bank. Also, we can see that the market from these lows from July or August, it has a mature cycle in the 4-hour time frame. It is possible to get a pullback, a small or a bigger one like that, but the market will still find buyers and we will continue to the upside potentially for the remainder of this year. So if you are looking for any trades in gold, you need to wait if the market allows you for a pullback to buy. Otherwise, anything you do right here is risky and you are gambling. And we do not recommend to any of our traders to gamble. We only take setups which they provide us with good risk to reward and longer term stability in our results and performance. So for gold, if it gives us this pullback, it will be a good buying opportunity for another move to the upside. If not, it will simply continue with small pullbacks right here and continue to the upside. So this will be the view, more upside in gold as we have been expecting for a long time, especially since this accumulation stage from May to June. We have said that gold is going to hit new all-time highs above 2,500, and still it has more upside for the main target area higher, which you can figure out if you become a member with the link in the description. You should have known about these moves way ahead of time, months before, when we are doing our bigger picture market analysis in our live sessions and in our market overview videos. And a quick update here for Bitcoin in the 4-hour chart. We have, as we have explained before, doing an accumulation range cycle since the last month or so. We can overall see right here the market might give us a reaction lower next week. We do not expect anything major at this stage, so we are overall trading within this range after the lows from the 5th of August. In the bigger picture, the market remains bullish for the weekly and monthly time frame. Obviously, if you are interested for the bigger picture and where the market should be heading in the bigger picture, we cover that specifically with some other crypto markets in our membership. If you become a premium member with the link in the description, you will get access to everything. Weekends market overview video. Many times we provide a report as well, and you are going to get 4 weekly live sessions between Monday to Thursday of approximately 1 to 2 hours of a live session. You can ask any questions, you can see our in-depth analysis and also the reasoning behind it. We do not just do typical technical analysis that you see around. We really explain everything in detail, things that you didn't learn before from anyone. You can learn them from us with our experience and our attention to detail. Plus, we cover also some fundamental aspects of the markets, because at the end of the day, the bigger trends they have, the macro trend is always affected by fundamentals more than the typical technical analysis that you will find online. So for Bitcoin, we can see more accumulation for the next 2 weeks or so before the market decides for the next move, which you can see what we can see as highest probability chance if you become one of our members with the link in the description. From the indices, the S&P SPX cash index, S&P 500, we are presenting 2 paths right here, because as we have explained before, the market is not clear for the short-term structure. For the bigger time frame, of course, we explained is still bullish, and this will be the view still for the market to go and make new all-time highs, whether with a double correction or whether a small pullback here and another move to the upside. This will be the next move for the S&P 500, but at these levels there is no setup, so there is no good risk to reward. So for short-term traders, this is not the ideal market to look for any positions, because you can easily get trapped in both directions at the end of the day. But if you get another pullback, this will be a double correction from the highs from the early September peak, and then this dip can be bought for this move to the upside. At the moment, these levels are not good for any positions to the upside, because of risk to reward is very bad. And also selling from here is super risky, because the main market trend remains to the upside. So we do not really like short-term trading on the S&P 500 at this stage. And to conclude our weekly market forecast video, this is the 3 Qs from our US ETFs, 3 Qs and GDX that we will cover. The 3 Qs are very similar to the S&P 500. We can either see a small pullback and another move for possibly new all-time highs or retest of these highs, or we are going to do a double correction, lower, retest the lows from 5th of August before we go to the upside later on. So this one as well, the best opportunity was to buy this dip that we have been explaining for the last 2 weeks. We expected to see a dip into the first part of September. This was a good opportunity to go long from here. At the moment, anyone who bought from here should be risk-free or have already taken some profits. And now, at this stage, the market is really a 50-50 scenario, and it doesn't provide us with any good setups. So either way, we will know probably next week what will be the outlook for the 3 Qs. And GDX, as we expected from before, from the lows from the 5th of August to continue towards the 40-42 area for the main target before we get some reaction. So we can still see short-term more upside in the GDX, which are the gold miners, is the gold miners ETF. And soon this one will also provide us with some pullback, at least before it continues higher. And this is what we can see for this market as well. So thank you so much for watching, everyone. If you are new here, consider to subscribe. Don't forget to leave us a like so more traders can reach to our content, and this way we can help more people to learn how to trade correctly. Again, if you really want to learn how to trade correctly, and probably you already know by following the main services you see online, just the typical market analysis you see online. Most of you have already got burnout, and this is one of the reasons why we started our service with our forecast. We want to help any kind of trader, whether it's just started out or you are more experienced but you didn't know what you were doing. All you need to know is how to calculate your position sizes. There are free calculators out there, and if you become a member and you follow our market analysis and concept and how the market really works, not the way that you knew until today, there are bigger factors that you didn't know that move the market. If you really learn those, then you will simply be able to take only the best trades and be patient when the market is not good for trading. We will also give you trade recommendations, whether it's short term or long term. We will explain to you all the reasonings behind all the moves that we recommend. There is nothing done in just guess or because of one candle or anything like that. Anything that we do is based on things that they really affect the market that most people are not aware. Also, you are going to get the in-depth analysis for daily live sessions if you join the premium membership. The link is in the description. And soon we are going to open a new feature in our service, which is a one-to-one session. In this session, if you really don't know about risk management, with a one-on-one session, we will be able to go through it together. It's going to be a 45-minute to 60-minute session that you can book, and this way I would say that most of the traders, they lose money not only because they trade the wrong side of the market, but because they don't know the correct position size to enter the market, how to split positions when they are accumulating, and where they have the stop losses and stuff like that. So it's a very big subject, and only if you understand the sizes, this is the only way you can make it in trading. So once again, thank you so much for watching, and we will see you in the next video. Expect from us more content now after the summer has ended. We will be uploading a certain, I would say, educational videos. We will try to explain a few things that most people are not aware of, whether it's some indicators such as the RSI, explain to you how certain things work, but obviously the biggest value you get it only with our paid service. So with that note, thank you so much for watching again, and we will see you in the next video, probably sometime on Wednesday, with an educational video on the RSI indicator.